Good evening. This is Ken Long from Tortoise Capital Management, December 29th, 2010. I want to put together a short case study on what we're calling the WMB technique for entry, the Williams percent %R first signal. The M is MACD histogram uptick, and then B is a breakout on 3-minute candles, WMB. And I want to show some examples of doing it wrong. I was trying for some different things, and the trade didn't work out very well. And then some other examples during the day of initial entries, and then continuation patterns that worked out pretty well by waiting for the signals to work. And hopefully gain some insights into our style of intraday trading. All right, so the first one I want to look at is RFA 2010-1229, and the symbol is MEE. So that stands for the Ready, Fire, Aim technique on December 29th, 2010. All right, so what we had was, here was the opening, some initial strength and then starting to fail, and it looked like it to me that it was starting to find support and started to hook up. And I ended up entering at 52.77 at the green line. Now it looks like I'm entering on this red candle. At the moment I entered, however, that candle was green, and I was trying to front run a move because I was looking at 52.77. I could have an initial risk of 25 cents, and then I'm targeting 53, and then 53.5 inside MEE. And it looked to me like there was a good chance it would find support in this area from yesterday's pullback and go. And so my stop was vicinity just below yesterday's this swing low just before the close. So I'm trying to front run that. Now when I come down here and look at Williams percent R, yeah, in fact we're at an extreme reading on Williams percent R, so that's the first technique. But the MACD histogram is still declining and has not upticked yet. Now, it's not below the signal line either, although that's not an absolute requirement, but it had not upticked yet. And so I'm definitely trying to front run because I'm thinking that it's going to take off and go, and I want to try to capture that move because coal has been and energy have been a position to go. So that's the intent. The front run does not work. It does go up. It's initially positive. But then turns and fails sharply when it breaks below this swing low. I'm out. I get an exit at 52.62, which is down 15 cents, and that works out to a minus 0.6 R. So I would classify this one as being too early. I knew when I put the trade on that I was trying to front run, that I was not waiting for the signal to develop. It still looked to me to be a reasonable trade, and thus it's called the RFA, or Ready, Fire, Aim. This one didn't work out. I'm pleased that it did not cost me more than an R, because that's where I get my improvements on. It was clear to me that once it had violated this low, that the reason to be in the trade was no longer there, and so I was able to take a professional loss. Now here's what happens if I wait a little bit longer. I get the Williams percent R extreme reading here. If I wait for the MACD histogram uptick by the second blue down arrow, then we'd be looking for an entry, and then we can actually see something about 52.60, and that would get us back to with a 10-cent stop on that one. We'd be able to get something perhaps out of this tall green candle, and maybe it scratches, but maybe there's a half an R or an R of potential in here. Now, it turns out that MEE was strong today along with coal, and it ends up trading as high as 52.80. And so this waiting for the second entry would have been better, I suppose. To me, it was worth the initial shot. I didn't take this second entry because I was already looking at silver. All right, so that's a case of going too early, I would say, in the WMB. Now what we're looking at is AXP. We're going to see, now this one I classify as an error. It's RFA 2010-1229 AXP. So again, it's the Ready, Fire, Aim technique, and it's December 29th, 2010, and we're looking at AXP, American Express. Now, this one starts off perfectly. You know, here's the opening. It's a harsh sell-off. Gets to an extreme reading here. on Williams percent R. We get an uptick in the MACD histogram at this green space, and so the proper entry on this one would have been about 42.65 with a 10-cent initial stop here at the dotted green line or at the dotted red line. If you wanted to wait longer, you could still reasonably enter at 42.70 with a 10-cent loss, stop loss or initial risk at the dotted red line. So this would be a nickel, that would be a dime. You get a first green bar. Somewhere up in here you can go to no lose pretty quickly, regardless of whichever entry you took. You get a consolidation, then a breakout. Now, in the chat room, I was working hard on MEE and on silver and Hewlett Packard, and so I didn't see this one. It was brought to our attention. It was brought to my attention in the chat room. Hey, AXP's taken off. I saw this pattern right in here. I definitely felt like I had missed the boat. I recognized the setups I should have been on, and so I let my emotions get the best of me, and I decided to chase. So I ended up getting an entry at 42.82. My initial risk of 10 cents puts me down here at 42.72. We get a little bit of a green bar, then the big red candle. I didn't stick around very long to wait on that one because I knew at the moment of buying it that I was chasing it, and so I took the half-hour loss and tried to feel professional about it. Now, when you compare these two setups, you can see what the timing techniques get you on the Williams percent R, then MACD histogram, then the candle breakout. Everything about this is wrong on the second entry because you can see the Williams percent R is already overbought, so the easy move has already been made, and it's falling, and there is no MACD histogram uptick here, so I'm already late into this little intraday trend right here, and that's the difference between a half an hour loss and a half an hour or 1 to 2 hour gain, depending on where in here I could get an exit. So that's again doing it wrong. So the first one we saw was doing it wrong, going too early. This one is going too late. This one definitely I was chasing. Now here's what happens later, that the same time period. I think the reason I was late and didn't notice AXP was because I was working this trade in silver. Now on silver you can see a large gap up and then a harsh sell-off. So we get a Williams percent R extreme condition here. The first MACD histogram uptick is here at the green line, and now you can see we buy the breakout at I should have had a 38.50, but I got a bad fill, so I get filled at 38.55 on trade 1, and I get a 10-cent risk. It's working in my favor. I get to no lose pretty quick. On this candle, I buy a second position at 38.75. In this consolidation, I take off the first piece and get an exit at 38.80. I'm sorry, right in here, 38.80. Pardon my slip is showing here. And so that gives me a 2.5 hour trade from the first entry from here to here. So then I'm back to one position on. I end up exiting this one at 38.87. That gives me 1.2 hours, so that nets 3.7 hours. So this one was right in the wheelhouse. Now something that I notice in here is when the fast line crosses over the slow line. That's the moment when things are looking good. Now, if you take a look at this crossover, right around the place where I'm exiting, so there seems to be some kind of natural timing. Looking at the fast line on MACD histogram under these parameters, and I restacking this one or restocking it because you can see it's come back down, and MACD histogram is below the signal line, so I'll be looking for an uptick to make my next entry. And in fact, what we get on is something very much like that. Now I'm noticing that the MACD histogram crossover points are a little bit slow to get in and a little slow to exit compared to my normal timing, but it still gets you in the ballpark. It's pretty close. What I like about this one here is this. There is no crossover, so that might encourage you to stay on board and get this second leg up. Here's a second entry on silver Wheaton. So we get the sell at 38. This is where we end up exiting at 38.87. The pullback comes back to here. We get a re-entry at 78 with a target of 99. 0.1 initial stop. Again, you can see the MACD histogram. Williams percent are oversold. MACD histogram uptick by the breakout, and this one ends up returning an R. Later on that same day, we get a pullback after that trade. It comes all the way back down to 38.55. We get an initial entry at 58 with an initial risk of 0.1. We end up getting a exit right about here at 38.72. We bought a second position at 65 right on this breakout. That one ended up being a scratch by the time because it went sideways and then trailed off in here. So there's another 1.5 hour inside silver. And that's 6R roughly in silver, just by following the timing model and being ready, not being too early or too late, as opposed to trying to front run or chasing. So I don't advise front running or chasing. Just stick with the strategy, and that's the lesson for today. I am pleased that the losses on the errors were less than 1R, but I got to tighten up that part of my game. So thanks for your attention. This has been Ken Long from Tortoise Capital with some insights into the WMB, the Will Make Bank, Williams percent R, MACD histogram, and the breakout on candlestick for entry. Thanks and good trading.